Welcome to Thursday Night Stock Charts Live. Excuse me, you caught me in the middle of a sip of a cup of water. This is where we review a lot. We're going to be talking about our options trade of Broadcom. AVGO is a company they bought out. I keep typing in BRCM. That's the old symbol for Broadcom. I like that one better. We're going to talk about the continued tearing down of the social fabric of the world. And the test bed is in New Zealand, Australia. We're going to talk a bit about that more. These are all pins, major pins that could prick this big, fat, ugly bubble that we find ourselves in. We're going to talk about Russia a little bit, another pin that could pop this bubble. We're going to talk about the weekly charts. How are we setting up to close out the week? Are we looking at a strong close, or are we looking at a potential top in this market? How do we appear poised as we move into next week? Because Thursday nights, that's when we begin to analyze our setups for next week. We don't wait till Monday. We start doing them tonight. And what I always like to say is, whatever review on the weekly charts tonight, one trading day left to go. What else? What are we going to go over next? Broadcom over. CRISPR, a CRISPR trade. I got to write that down. We traded CRISPR. That was one of our top 5 stocks going into the new trading week. We did very well with that. That is now below where we sold the shares at. Now we're going to look to get back in at a lower price, assuming that the setup holds. What else we got to go over? I think that's it. Let's get to it. I hope there's a doctor in the audience, because I need somebody to explain to me how the CCP virus is the disease of the unvaccinated. So if you get the shot, this is the narrative. If you get the shot, well, that makes everybody else safe because you can't transmit it. But that's not the case. You can transmit it. But the scientists and the politicians choose a narrative, and they want to choose to ignore the science. It's freaking me out. And you have attorneys in corporate America. What are they doing? Well, they're saying, get ready for the mandates coming down the road, rather than going to HR and saying, do we have the legal recourse to really be able to do this through OSHA? Does OSHA have the right to do this? Do they have the mandate? Does the president have the mandate to dictate what OSHA does? No, he does not. This is not law. That's why it's being struck down in the courts. So a lot of odd stuff going on here, and I would love a contrary comment. Somebody explain to me what it is. If you were to say to me, you know what, everybody gets vaxxed, you have less people taking up the emergency rooms. Okay, all right, that's an argument. Show me the statistics of who's taking up the emergency rooms. I can't get the data. Is it the vaccinated, unvaccinated? What's the percentage? What are the ages? Give us the data. They won't do it. All they do is this, and this is dystopian at this point. You take a look, and before I bring everybody down, can you smash the like button? Take a look at this gremlin, as Salty from the Salty Army says, the gremlin. The definition of fully vaccinated will be changed. It's never going to stop, folks. It's never going to stop. This comment began, I'm so out of sequence here. Here. This broad, I'm telling you, I hope I live long enough to see military tribunals, because this broad, she's going to go straight to the gallows, because she is demonic. New Zealand Prime Minister, you got to watch the video. It's on Twitter. I'm sure it's elsewhere. Her name is New Zealand Prime Minister Jacinda Ardern. Here's her comment. There's not going to be an endpoint to the vaccination program. And you listen to this woman speak. She likes it. She likes it. That's the crazy part. So I don't know who Soros paid or how much he paid to get these people to sell their souls to the devil, but this is insanity. Here's the comment. Here's the video. And what does this have to do with stocks? These are the leaders. They're making decisions. They're making decisions for us. This gremlin here, he's making decisions to shut down the country, to mass vaccinations. This broad is all for the.
So long as there's people who are eligible who haven't been vaccinated, we've got work to do. I don't think I'll ever be satisfied so long as there's someone who's who is eligible and hasn't been. And that's why I've said this, there's not going to be an endpoint to this vaccination program. Once we're rolling out boosters now, so we've got another wave of people that we need to make sure that we're protecting again. So those who were vaccinated 6 months ago, we really need them to come back, or we need to go to them.
This woman's the devil. We continue. This disease is so dangerous. They fired all these nurses. Now, traveling nurses triple their salaries as hospitals struggle with national staffing. This is not an impact by the markets on the free market. This is the impact of our government. This guy here, the potato in the White House, their decisions led to this inflation on the wage front for nursing, a nursing shortage. So if you want to save lives, you got to get rid of Fauci. You got to get rid of this president. They got to. No call to action here. They got to be voted out. He's got to be fired. This guy's got to be fired. He's got to go. Leads us to this. This is the market that we're trading, folks. These are all threats. I'm going to go to this later in a moment. So the poll numbers for Biden are, I don't know if they're lower than Bush the Juniors yet, but they're pretty darn close. And they're collapsing and going down further. Kamala Harris, I believe, has the lowest ratings of all time. Lower than Cheney, I believe. And everybody hated Cheney. So what happens? What happens when a country and their politicians can no longer, their narrative doesn't work. They're unpopular. They're hated. They're despised. What do? They go to war. They look for a war to change the direction of the focus of the people off of them and onto a war. They don't care about who goes to die. It ain't going to be their kids. So here we are continuing to ratchet up the tensions between the United States and NATO. The Warsaw Pact fell over 30 years ago. Why is there still a NATO? Biden says sending troops to the Ukraine not on the table. Now, there's no way that we're going to invade Ukraine or send troops into the Ukraine until the spring. You've had two major powers try to attempt an attack on the Russians at the wrong period of time, Napoleon and Hitler, and it didn't go well. So if anything's going to happen, it's not going to happen now, but watch for late winter for things to ramp up. Russian jets continue to escort NATO aircraft away for the second time in 2 days. Why are we doing this? Why are we doing this? Why are we continuing to ratchet up the tensions? We have no political interest there. The Russians have a major political interest. They're going to fight. And they have hypersonic weapons. What are we going to do? Use tactical nukes? We even have this Republican now, a Republican. They're supposed to be the same guys in the room, but they're not. I always knock them too. Using tactical nukes is not out of the question. Do these people ever read history and how harmful war is? What happened to Hiroshima and Nagasaki? These are our leaders, folks. There are no grown-ups in the room. So we move on to the economic front. And I like this from Elon Musk. So I thought I'd play it. Let me make sure my volume's up.
Then, at some point, really what you're doing is capital allocation. So you're not it's not money for personal expenditures. What you're doing is capital allocation, and it does not make sense to take the job of capital allocation away from people who have demonstrated great skill in capital allocation and give it to an entity that has demonstrated very poor skill in capital allocation, which is the government. You can think of the government essentially as a corporation in the limit. The government is simply the biggest corporation with a monopoly on violence, and where you have no recourse. So how much money are you going to give that entity?
Okay, so the reporter asked him to explain the last part. Every government has a monopoly on violence, and this is what's coming down the pike. This should really scare people. And I'm sorry I wasn't sharing my screen. I just realized when I played Elon Musk. But these are the pages I was showing. New Zealand. I'm going to replay. I'm not going to replay it. It's just bringing everybody down. Fauci article. Fully vaccinated definition is going to be fully changed. It's never going to stop changing. Traveling nurses, they triple in salary, and the list goes on. And as we proceed into the talk of Evergrande, you know what that brings to mind? TrendSpider. Folks, if you're not currently using TrendSpider, you got to start using. Don't settle for ordinary trading software. Automate your grunt work, speed up your technical analysis, and improve your accuracy. Reduce costly analytical mistakes and find winning chart setups with their scanners. Time your trades with precision using their trade alerts, which I use all the time. You're going to see me using them later on when we do members stock chart requests. I've been telling people about my recent travel. I did 3,100 miles, and I used, you can see I already have it loaded up, their application the entire way. Never let me down once. You do not need to be in front of your computer screen to trade the market. And it's an awesome, awesome application. It comes with their service. Check them out. There's a link below in the video description area on YouTube, above if you're watching us on Twitter. Go over to their website. They have a 7-day free trial offer. They have a demo tour. You can also get it free with my membership, silver or gold level membership, 14-day free trial offer, and you get that free, TrendSpider free. So take advantage of it. And let's talk about today's price action. And we're going to segue over into Broadcom and their earnings. Okay, so this morning we woke up to Evergrande, and the market sold off on it. And folks, anybody that calls himself an investment professional and didn't expect this deserved to lose money today. I mean, this was written all over the wall. So everybody should have expected this. It's been going on for weeks now. It's finally happened. They've defaulted. The question is now, who is next? Who also has counterparty risk? Who owns their debt? Who's overweight that debt? And how is it going to impact their business? So keep an eye on this. I mentioned this weeks ago when this first came up. This is a serious story. So it always begins with a rumor, and then all of a sudden that rumor becomes reality. So here we have now fact. Evergrande done. And all you need to do is check out their stock, and it's trading like a company that's in bankruptcy already. All right, the Fed's balance sheet. Expect this to continue to rise, but at a much, much slower pace. And with that, the market, you should expect the trajectory of this rally to slow considerably. And I'm suspecting that come Q1 of this coming year, we're going to get a correction, and we're going to get a hard correction at that. So I'm going to be preparing members for that. I'm reluctant at current to go shorting the market. I was asked a couple of days ago, are we ready yet to go shorting the market when the market was selling off? I said no, because you got seasonality and you got to expect a counter trend rally. Let's look for a failure to take out the higher lows that we've already seen. And then we'll look to short the market and then lean into that short on a break to new lower lows because it's going to get ugly real quick, real fast. That's redundant. All right. What else do we have? Our bonds. So yeah, the Federal Reserve not buying as much. What happened to yields today? Or this week, I should say. They gapped up. I think that this is not so much a reaction to the bond auction. I think the bond auction was yesterday. Or was it Tuesday? It was either Tuesday or Wednesday, one of the two. But we gapped up on the week. I think that this was a technically oversold condition on yields and overbought condition on bonds. And we've seen a pullback. I think this ultimately fades, and we're going to see a resumption of this consolidation. I don't think that we're doing anything one way or the other. We've been stuck in a trading range for quite a while now. And I'm going to go to the weekly charts, then the daily charts. We're going to talk about that more in a moment. Let's go to some comments and say hello to people. Is AVGO going to be red tomorrow? Only if the markets are red. I doubt it. They had very, very good earnings. We're going to go to them in a moment. Yodi, thanks for that. I'm just seeing your comment now. Thank you. That's the first time I ever did that. Sorry about that. It's embarrassing. Talk about AVGO. I'm going to. Congress. Let's see what this is. Congress having hearings on the new Web 3.0 transition involving Bitcoin. Experts to come in and explain how it works. Web 2.0 with big tech going down. Yeah, there's a move now to decentralize from the Web 2.0 was social media. There's a move now to go back to, and I don't know if this is Web 3.0, but what I'm observing, being a small business owner and understanding how some business owners that are somewhat controversial are behaving, they're going back to the old URL format as a centralized platform. Salty Army is one. He has the Salt Must Flow. Tim Pool has a website. I think he's got a paywall up now. Alex Jones was really at the forefront. Alex Jones was at the forefront of this. So you're seeing a lot of that now. So these web companies, Twitter, Facebook, YouTube. I love YouTube, but unfortunately, they're telling people you got to leave unless you want to watch cat videos. It's crazy. So I like cat videos, but I don't like cats too much. So it's not enough for me. Let's talk about Broadcom. All right. So Broadcom is an interesting trade. So to illustrate what we did here, so when we trade earnings, we do not buy options. I'm going to tell you why in a moment. In fact, I'm going to illustrate for you in a moment what we do. And I've been trying over the past several months to really educate people on the value of knowing how to sell options to generate cash flow, to try to stay as much market neutral as you possibly can. We're in an expensive market. We're in a dangerous market. That's why I start off with these headlines to show you there are a lot of pins out there to burst this bubble. We don't know when it's going to come, but when it does come, it's going to come real hard. So we want to have a little bit of distance, not a little bit, a lot of bit of distance between us and where the market was trading at the open on any one given day or at the close of the prior day. So let's talk about AVGO. I'm going to illustrate for you our strikes on this. We sold the calls and we sold the puts. This is what you call a strangle. And we went out to next week. The options expire on the 17th of next week. We're not going to hold on to this position that long. I already have my order in to get out. So I'm just going to wait for my phone to send me an alert. That's it. So I'll talk to you more about the exit in a moment. So we sold the options. Why don't we buy the options? Well, look at the earnings here. Couldn't we have done really, really well by buying the options? Maybe, maybe not. Why wouldn't we have done well by buying the options? Well, because they're expensive. They're very, very expensive. And I'll show you how we price out the options. We go to so before we leave here, these are our brackets. Here's where Broadcom needs to be trading tomorrow morning for my call strikes to get executed, or to get challenged, I should say, to be challenged, not executed. And that's to trade all the way down here for my puts to get challenged. That's not going to happen, absent a geopolitical event, God forbid. So we brought in a credit of $2.58 per contract. So 10 contracts, that's $2,580. So the options, and here's how I know we're probably going to make money. You don't know until you're out. The options, the reason why we didn't buy them is because they're overvalued. This is the IV index, the implied volatility index. Last month, the options the calls had a 27.37% implied volatility. That's the measure of volatility. Today, those options, the very same call options, 43.454%. That's a 40% premium, 45% premium over last month. So what do you think is going to happen tomorrow morning now that earnings are over? The implied volatility is going to revert to the mean. You're going to get what you call IV crush. So the reason why we don't buy options is because I know they're overvalued. And even if the shares spike up hard tomorrow, I still may not make money. But if I sell the option, different story. Those deep out of the money strikes were very overpriced and way far away from where the shares traded. So what's going to happen to these shares, even though we're trading up, or these options, even though we're trading up in the after hours, now we're up $620. Well, our strikes are up here at $660. The value of those options are still going to decline in value because earnings are over, and the implied volatility, which drives the value of the option, collapses, and we exit. So our target is to make a 60% profit on the trade and ideally be out of it before lunch. So let's talk about Broadcom's earnings. And this is what we've done all earnings season. We did it ever since April. I've really gone hot and heavy into options because the stock market has been so overvalued. I've been reluctant to take on very large positions. So what did we do? We just went with options and generated a lot of cash flow. So AVGO report, AVGO, I keep doing that. I keep looking at the symbol. Broadcom bought out AVGO. They kept the symbol. It drives me crazy. The old symbol was BRCM for Broadcom. All right. So they had really good earnings, man. They beat on sales, revenues. They are buying back more stock. I think it's $10 billion more stock. They're raising their dividend. Nothing not to like here. Broadcom, absent the stock market correction tomorrow, should close up on the day. If it doesn't, there's a problem with the market. There's a serious problem with the market. And this is not an expensive stock relative to its peers. It's got a 22 PE. And that'll shoot up higher tomorrow. What's the PE? Yeah. Closed out the day with a 22 PE. It's raising dividends. So a very, very good company, a very good earnings report. Look at this. Annual ROE, 40.9. Folks, a company with ROE, return on equity, in the teens is doing pretty good. ROE above 40, company's a monster. Very good earnings. Let's go to the weekly charts. Seymour Rivers, silver. Okay, we'll talk about it. Randy, hey. Ark, yes. Hi, Sandra. Another female. We don't get enough females. Good to have you here. Yeah. That ARK fund closed down below $100 a share today. That's a problem. We'll go over it. What's the buzz? Tell me. That was great. You caught me off guard. Tell me what's happening. Abel. BBIG. Okay. Bob, why close the put so early if you think they will not get challenged? Because there's other opportunities out there. So, the longer you hold on to a position when you're selling options, the greater the probability of your strikes getting challenged. So tomorrow, I expect fully to have a big move up. The value of the puts are just going to get wiped out. But the IV crush on the call side, by the first hour, they're probably going to stay up there in value, but then they'll dissipate in value, especially if we gap up, overbought intraday on Broadcom, and then we come in, the value of the options expiring next week are going to decrease. I can make money elsewhere. There's no sense in tying up so much capital in a stock that's $600 a share when I could tie up less capital, put it to work elsewhere, because we have a lot of other opportunities out there. And the other factor is that I believe in seasonality. I believe that in all probability, we're going to get a rally into the back half of the year. So I would rather just book a quick, ideally 60% profit and move to the sidelines. It may be more than that, but we want to book those profits, make them real, and look for other opportunities. Simple as that. We don't want to stay too long. When God gives you a gift like that, you walk away. If the options are going to expire tomorrow, I let them expire worthless. But with 1 week left to go, too much can happen. I've seen too much. I've been around too long. Binary events can happen, and first out, best out. That's a saying I like to use. My father taught me that. First out, best out. Move to the sidelines. Look for other opportunities. Good question, though. Eric, looking to short Apple. Yeah, Apple, second largest component of the triple Qs. Be careful with it. Timing is everything as usual, but I'm not arguing the point. Apple's got its issues. They're totally in bed with the CCP. Maybe the CCP that saves that company. All right, let's go to the weekly charts. Then we'll do chart requests. I'm going to blow through the weekly charts pretty quickly here. Bond yields we already went over. Let's talk about bond prices. Weekly chart. We hit resistance yet again today and reversed. So what we want to do is continue to acknowledge what's setting up here as a potential threat to the market. And that's this head and shoulder setup. Left shoulder, head, right shoulder. And if we break this lower band of support at, let's call it 144 on the TLT, that's a problem. That's a serious, serious problem, because that means that we're probably going to challenge the neckline, which is down here. I should have extrapolated this out, but that's going to be at around 137.50. If we break that neckline and close their weekly time frame, the stock market is in a lot of trouble. Why? Yields are ripping up higher. And it may not be the entire stock market. It may be sector specific. Tech, annihilated. Banks may do well, assuming that the overall S&P 500 does not roll over with yields. I don't think it's going to happen. I think that we have enough room up to around 2 to 2.25%. The overall stock market to continue to rally. When I say that, I'm talking about the Wilshire 5000 and the S&P 500. Tech will lag, and the banks will outperform. They'll pick up some of the slack. Energy, not quite sure yet, because energy's not having a good week. It didn't have a good day today. The tips. Horrible week. Treasury inflation protected securities. Why do we watch the tips? Because it's an indicator of where the big boys are putting their money to avoid inflation or protect their capital from inflation. And you could see that the tips are under a lot of pressure. And we're retesting yet again. Come on, man. Come on, man. I can't get rid of that arrow. They're retesting the lower band of support. I think there's a good chance we break on the tips. What's causing that? Rising yields, rising dollar. Rising yields, rising dollar puts pressure on the tips because the perception is that the rising dollar, rising yields are going to snuff out inflation. Daily chart. We broke support today. Tips are in trouble. I would not be a buyer of the tips. We broke support. How was volume? Just shy of average. Stokes are an absolute and utter disaster area. Avoid, avoid, avoid. The US dollar. I'm going to refresh this in a moment. This is as of the 8th. Here's how we closed out yesterday with a bearish reversal bar. The dollar's under a lot of pressure. But now I'm going to update it to see how we closed out the day today. The weekly chart will update, obviously. And now we're up on the week. So this is what I mean by one trading day can make a big difference. And why does this matter? Why do the tips matter? Why does the dollar matter? It's because we have gold mining positions. And we don't want to be buyers of the gold miners if the dollar continues this uptrend. We'll sell covered calls. We'll generate cash flow off the position. But we got to be very, very careful. Daily chart. Decent move higher today. This doesn't give you volume. I'm going to bring up the dollar bull ETF. Get a feel for volume. Moved up higher. Resistance at 25.80. Very light volume. I'm not buying the rally in the dollar today. I predicted this sell-off yesterday, and I'm questioning the rally today. Let's see what it's doing after hours. It's coming in a little bit after hours. And you can see how it's sold off of its highs. Could certainly rally back. It's very volatile. But the euro has been, oh, look at the spike up on the euro. This is only a 15-minute chart. What's the yen doing? Something's happening. That's a big move. Something's happening. Yen's gapping up too. Interesting. But the dollar's not responding all that much. Strange. You would expect it to gap down. Let's see what gold is doing. Something's up. Gold had a horrible day today. Not responding much. We'll keep an eye on this overnight. Interesting setup happening here. Okay. Let's get back to the charts. The VIX, the volatility index. Michael, do Chris Bobby. Okay. Did you trade it with me? I'll go over it. No doubt. Biotech has been horrible for the year. Yeah, I think that we're probably near a short-term bottom. I'm not. That's not a guarantee, obviously, but I'll talk about the way I'm looking at uh, CRISPR. And I was even challenged on the not challenged. It was a question that was posed to me in our Slack forum of why I opted to sell CRISPR. And I'll talk about that one more when we go to that chart. But stick around. We'll go over CRISPR in a moment. So the VIX collapsed on the week, down nearly 30%. Daily chart. A bit of a reversal bar today. Silver trading volume so low for the past few days. It's been consolidating, silver, to be fair about that. The United States Senate has just cleared the way for Democrat. Yeah, I was going to talk about it. The picture I saw was not Pelosi, McConnell and Schumer walking around. Buddy, it's a uniparty. There's no representation. There's no representation in Washington. We have Marjorie Taylor Greene and a couple of other good ones. Jim Jordan. Other than that, I can name them on my fingers. The rest I wouldn't give you a dime for. All right, so the VIX, bullish reversal bar today. Do we get a follow through tomorrow? We don't know yet. Way too early. Stokes are weak, declining down below 50. Rallies tend to fade. We faded a little bit here today. So we're definitely in a corrective mode on the VIX. But so the question is this. Here's what we want to do. We want to take our crayon out. This is why I never delete my annotations. Because there have been annotations I've drawn months ago, and they're still relevant. I drew this weeks ago. It's still relevant. We've got to hold this lower band of support. Let's call it a 19 handle on the VIX. We break that 19 handle, we close there, we're going lower. Maybe down to a 17 handle. That means stocks are rallying. The Dow Transports, weekly chart, up 2.25%, a little bit of a fade, resistance at 16,500. Volume good on the week. That's good. We like that. We like good volume. Daily chart, transports up. Why were the transports up? Yields were up. This is why we need to know what bonds are doing. I know a lot of people, they join and they're like, listen, man, well, I don't know. I didn't join for bonds. If you want to be relevant in this business, and if you're a trader, this is our business. We need to watch the bond market. The bond market dictates what the stock market does. If you ignore the bond market, you're in trouble. So learn what sectors do well when yields rise and yields fall, and you'll do very, very well. It's another arrow in your quiver, along with TrendSpider. 35% discount code below. Use my discount code. It's in I forget what the code is, but it's down below in the description area on YouTube. Transports, good. Daily chart, bullish reversal bar. How was volume? Volume was okay. Slightly below average. Watch out for a lower high here on your Stokes. Ideally, we get a breakout. We're right there at resistance. You can see how they stalled right at resistance. I think it's official now. Oh, they have to. It's all one party. Marjorie Taylor Greene was a QAnon lunatic. What are you talking about? I don't even know what QAnon is. I have no idea what that is. I've heard of it. I'm not into that. So she's the only reasonable voice that I know in Washington right now. Got to rattle these Marxist cages. Dow Jones weekly chart, bullish key reversal bar. We're up 3.4%. Why? Yields are up. Counter trend rally on the week. So the Dow having a good week. The day was back and forth green. It closed flat on the session, right at resistance. Volume was just below average. S&P 500 weekly chart, very close to all-time highs, folks. And this is really, this is a perfect illustration of why I don't want to hold on to Broadcom for another week. If you break out on the S&P 500 to new all-time highs, that sparks a fuse under potentially the tech stocks. Broadcom is best of breed right now. And if you take a look at Broadcom, and this is one of the reasons why I went so far to the money on Broadcom, was because you keep typing in the old symbol. If you take a look at the weekly chart, we're at all-time highs on AVGO. It hit all-time highs after hours. So normally when I set up my strikes for my strangle trades, ideally you're always going to have support below somewhere, but you may not have resistance above. Why does that matter? Well, you take a look at some people may want to use a probability calculator, and you may look at this and say, wow, there's only a 3.4% chance that Broadcom trades above 660 next week, next Friday, not this Friday, next Friday. That's a deal, man. That's money in the bank. That's not probability calculators. Don't take into consideration binary event. What's a binary event? Earnings. An event that could drive the stock up higher like that. That's not calculated in here. Guaranteed tomorrow, this is going to be about 25, 30% probability that the shares or this 660 call strike could get tested. I don't want to be around for that. I don't want to deal with it. I want to look for other opportunities, and we live to play another day. Let's go back. So when you're taking a look at setting up your strikes and you don't have resistance above, you got to be very, very conservative, because you could get a situation where the shares crash up. So just be careful. IWM, weekly chart. These are the small caps, up on the week, but they've given up a lot of real estate this week. Volume is good. Daily chart. Whew. Brutal day today, man. Holy cow. Wow. This is what you call a breakout point failure, also known as a bull trap. Let's talk about it. So we broke out yesterday, the 8th. Normally you get a pullback and a retest of the breakout point. That's healthy. That's good as long as it holds. This did not hold. So not only did we break back down into this trading range, we crashed through the lower band. Small caps are not looking good. Big volume too. Small caps are in trouble. Trip Qs. This is a monthly chart. We're flat on the month so far. Take note of the MACD histogram. It continues to lose momentum on a monthly time frame. Let's go to the weekly chart. Volume is good. Let's go to a daily chart. Right, so you can see they broke it out on the 7th, a follow through yesterday, but now a reversal. So the question is, this is not a horrible chart. It'll be horrible if we close back down below this line in blue. That'll be horrible. because in all probability, we're going to retrace back down to this lower band of support down here, and there's a likelihood that we break. So the Tues have a lot of work to do tomorrow. They really need to defend this lower band of support now. It was resistance all through here. It's got to act as support, or the Tues are in trouble. The banks up on the week. We're holding the breakout point. Now, we're long of the banks. We haven't added, but we may be adding as soon as tomorrow, because what we did so far this week is we've recaptured what was support before but failed is now support again. I want to make sure that at 3:55 Eastern Standard Time tomorrow, that we're above that line in blue, that we haven't failed to hold it. Because if we fail to hold it, then I don't want to buy more. I want to stop out. So if we hold it, we'll look to buy more. Daily chart. A down day today. We broke out on the 7th, retest today. It held. Let's see whether or not it holds tomorrow. Tomorrow's going to be a critical day. Now, one good thing here is that our stochastics are beginning to break out and are back above 50 on a daily time frame. That's very bullish. So these are not just a couple of squiggly lines. This is an indication of momentum building. So that's a good thing. That's what you want to see. So the weekly chart looks good. Daily chart looks good. Our Stokes are going in the right direction. We're nearing that time where, okay, we can go adding more. Am I going to kick myself for not buying at a lower price down here? No. I'm going to pat myself on the back for showing the discipline not to hope when I should fear. So we'll look to buy more, because now our probabilities of a breakout are vastly increased versus buying down here when there was blood in the streets. How much time do we have? All right, I'm going to wrap up here because we have some chart requests to go through. She was all about QAnon. Didn't she say the forest fires in CA were being started by aliens? I have no idea. I doubt that. Come on, Randy. Come on. I don't think so. All right. If you show me a clip, then I might have to change my mind, but I don't think that's the case. All right. Technology, weekly chart. Despite today's price action, we're breaking out. At current, one trading day left to go. We could give up this breakout tomorrow. But this is another reason why tomorrow I want to be out of Broadcom. Technology's breaking out. Let's see how the semis are looking. Semis holding a breakout point, consolidating. So by me holding on to those calls, I'm short of Broadcom. I don't want to be short of Broadcom. You know what I mean? Because if this breaks out 1 week from now, is it impossible that Broadcom is not above 660? It's possible, and I would prefer not to take that ride. First out, best out. First out, best out. RSI hooking up. Not a bad looking chart. Looking good. Let's see what the daily price action was. Bearish reversal bar. On very light volume, and volume decline versus yesterday's down volume. So don't be surprised to see an up day tomorrow, possibly a gap up higher, an inside day on the semis. Biotechs. Up on the week, but they faded off the highs. Energy. Up on the week, but they faded today. Gap down. I've been saying that this is a bear flag setup, and sure enough, it looks like it's a bear flag setup that is now breaking. Let's go to gold. All right, so the monthly setup on gold, we're flat on the month. We're at the precipice of a breakout here, potentially on gold. What would hamper that breakout? Rising yields, rising dollar. Daily chart. I hate the daily chart. I've been saying for the past couple of days, I don't like the chart of gold. We may be looking to put in a W formation on the Stokes here, just like you had back here, somewhat back here, like back here. Let's do some chart requests. All right. All right, so let's talk about CRISPR. Now, CRISPR I spoke about over the weekend as a potential trade going into the new trading week. What's today? 6th was Monday. We got long of it here on this bullish key reversal bar. We spiked up higher the next day and we booked our profits. We exited. So we had been stopped out the week prior, and thank God we did because it dropped more, a lot more, and we got back in. So we made back our loss plus a couple of percentage points on the trade. So a good trade. So the coaching I gave to new members especially is that, stocks that have an RSI of, where is it? Here. What was our bottom on RSI? We had it was lower than this. We were down below 20 on RSI. And normally you do not get a new bull market right out of the gates. What happens is you get backing and filling. You're going to get a short covering rally, and then you're going to get a pullback. And ideally, you're going to put in a higher low. So we knew that we had support here. This is where we got in, enjoyed the rally. Now we're looking for a pullback and possibly a retest of this support level here at 74.12. I believe that this is a 4-hour support level. Yes, 4-hour support level. And if that fails, we may retrace all the way back down here where we have the automated trend lines. Click of a button and retest this lower band of support. That's where I want to look to get back into CRISPR. I want to see a higher low. That's what I want to see. Or a retest. Let's go back to the daily chart. Or a retest of this low here at $67.29. As long as we get a higher low and or a defense of 67.29 and we do not break that support level, CRISPR is still a buy to me. I wouldn't buy it yet. The setup's not there. The patience in this business is waiting for the setup to come to you. I have the capital. They want my capital. I'm not going to buy too soon because I don't see the setup. I think we're pulling back further. That's why we always keep our support levels handy. We want to know where our support levels are. I want to know if we break this. I already have an alert set here. Was this? Oh, it triggered the other day. Let's delete this. Remove the alert. Create an alert. I want to know if we break through Okay, so I want to know if we break this support level, because that's going to have me eyeballing this next support level at $70 per share. If we get down there, I may begin to nibble. That way I could put a stop loss right below 67.29. If I'm wrong, I get stopped out with a small loss. That's it. If I'm right, okay, when do we add more? Okay, that's a great question. Right here. We rally up and through the highs of the week at $80.91. Your downtrend, at least on a daily time frame, is over. You have now entered a new uptrend on a daily time frame. CRISPR hasn't seen that in a long, long time. Going into this week, we also knew that the weekly chart, CRISPR has been down 11 weeks in a row. The probability of that continuing was highly improbable. We were due for a rally. So if we buy back in down here between $70 and $67 per share, I want to add more on a new breakout, a closing breakout above, let's call it $81 per share. Yes, I'm paying more, but the stock is showing me value. It's showing me it's got buyers behind it, and it's got the power to now break through resistance, which it didn't have this week. So that's why on these dead cat bounce, we book our profits quickly. Get out. We don't kid ourselves. I know how this usually plays out. You rally, you pull back, you get back in. If you're wrong, well, you know you're wrong if you break down to new lower lows. If you're right, you break out to new higher highs. Simple as that. It's not rocket science. The guys on CNBC, those well-dressed thugs, the banksters, they want you to think it's rocket science. That way you need them. You don't need them. Trust me, you don't need them. The last thing you need are the banksters. They'll relieve you of your money real quick. All right, let's go through. I did AVGO. Silver. We're long of silver. Yeah, silver broke today. That's a problem. Silver may go lower. We broke out. We may retest this support level here in green, because that would mark a retest of the breakout point. Basically, it's technicians like me looking to see a good entry point. If it fails to hold, if we close down below this line in green, got to get out. What else we got? Oh, ARC. Okay. So she's now under a lot of pressure, even on CNBC today. I believe she was on. The stocks that she owns are like the most vulnerable out there to a sell-off on rising interest rates. They may do well, 4 or 5 years from now. She's a long-term thinker, but I always say this. I like Kathy Wood. I think she's very, very smart. I think that she has vision, but I don't think that she has a technician on her staff, and she needs one badly because she buys horribly. She buys on the promise of a future. That's not a way to buy. Hope is not a strategy. So I think she overtrades her account, and she's got to stop. She ought to raise some capital and be liquid. This fund is now down below $100 a share. It hasn't been down below $100 a share in quite a while. What was the low here? Low. The last time it was May of 2021. We're still in a trading range here. So it's not broken on a monthly time frame. It hasn't broken support. We're in a long-term trading range. Weekly chart. We're up on the week. but we're off the highs of the week. A lot of resistance above now. Good volume. But the daily chart, man, it's not good to have this fund down below 100. Psychological. So I would not be a buyer right here, right now. I think the stocks in this fund are very, very expensive. And this market has a lot of pins that could pop the bubble. These moronic demons. Inflation. Our nitwit president trying to pick a fight with the Russians. So way too many pins out there. And if this bubble gets burst, this fund is in a lot of trouble. So I would be very, very careful with adding more money. But I'll tell you, when we begin to bottom out, I'm looking at this fund. BBIG. I didn't go to the members area first. All right, ticker cloud. Anything from members? LABU we already did. Faded off the highs of the week, David. I'll go back to it. I didn't go over the daily chart. I didn't see your request here, so I'll go back to that. And Greg, DKNG, we can go over as well. We may have already done that, but DKNG I like, DraftKings. All right, BBIG, Vinco Ventures. Is this a SPAC? I've gone over this before. Apparently, I did way back up here. I broke the support level that I drew. Long-term downtrend now. Here's your double top. This is when the market send you signals. Here's your double top. If you weren't out on these topping tails up here or on this break here, you should have been out here. The week of November the 1st, when we broke down from putting in higher lows and higher highs to putting in lower highs and then lower lows. That was your confirmation breakdown. Daily chart. We're bouncing here. I don't see the trade. I mean, we had a couple of days worth of up move. Then today we broke support. I don't like it. I would avoid these shares and revisit it some point in time in the future. You're welcome, Seymour. NG. Could NG. Hey, Larry. NG. All right, so right off the bat, I'm going to stick with the daily chart for a moment. And right off the bat, I picked off, this is the value of the automated trend lines. It took me all of 2 seconds. I'm going to take them off, put them back on. We're in a downtrend channel on a daily time frame. So we broke what should have been support here. We retraced not all the way back down to this lower band of support, which is frankly bullish. We've now rallied. Ideally, if you're looking to buy this stock, you got to break out back above this resistance level. And it's got to close there. I don't care if it trades there intraday. It's got to close there. Then I would be interested. Large caps on. Okay. Keep it active for a few days. So our alert is set. So until this downtrend, this series of lower highs and lower lows comes to an end, and we put in a higher low and a higher high, you want to avoid it. Let's take a quick look at a Weekly chart. Yeah, not much happening here. And I'm long of the gold miners, but I'm not going to speak my book. I'm giving you my honest opinion. I'll leave the lying to the banksters. So I would avoid right now, Larry. Last one up, LCID. Lucid Group. Monthly chart does not look good. Outside reversal bar. Close to an outside reversal bar. But we have fully engulfed the body of last month's price action, not the open and the close, not the extremes, but close enough for government work. It doesn't have to be an exact science to say, be very, very careful here. We're down on the week, and here, the value of the automated trend lines. So we had this nice run up. All right, what if you knew where resistance was? Click of a button. You could have set an alert. Touch, bounce. And you could have avoided the sell-off. Woulda, shoulda, coulda, but that's the value of the automated trend lines. So bearish reversal bar in the week. We have a little bit of support at these moving averages. Volume is high to the downside this week. I would be very, very careful. I don't like it. I think it's going lower. You know, I referenced the monthly chart, and I need to be fair and say we're not even at the midpoint of the month. For all I know, this thing rallies back, goes off to new all-time highs. The probabilities are improbable, but you never know. We want to keep an open mind. And just because it looks like this, the second week of December doesn't mean it's going to close that way. It could close worse or better. Oh, Apple. That's right, for Eric. Apple on the monthly time frame, Eric, is looking pretty good. Remember, they're in bed with the CCP. New all-time highs this month. On a weekly time frame, we're trading above the third standard deviation Bollinger Band. You said you wanted to short it. I'll tell you where you'd want to short it, and that's right up here. The same example I used for the last chart holds true for this chart. You want to get the best, especially when you're shorting, because the probabilities are against you because Apple is A, loved, B, seasonality is favorable this time of year. What's the other reason? Shorting is very, very dangerous. It's a very dangerous game. So you need an edge. So it's great that we're trading above the third standard deviation Bollinger Band. But what if I'm going to take off the automated trend lines, and this is what I try to hammer home, folks, automated technical analysis. Boom. It's at all-time highs, but the algorithm calculated out where there's going to be probable resistance. Where do I want to get short? Right up here. Were I long, I'd be looking at profits once this alert fires off. So at current, that resistance level is at 182, around there, but it's rising. So if it takes a few weeks, calculate that in. I'll share this with you so you have it. Volume is good to the upside this week, so I would not go shorting it right now. Daily chart. And McNeil. Oh, LCID. Oh, you shorted it. Oh, good for you. LCID. Good. Good. Daily chart. Apple broke out, yes, again, the value of the automated trend lines. Here you go. Click of a button. We broke out above resistance. It was resistance here, here, here. We broke out yesterday. Today we retested it, held. We got to hold this support level. Now, keep in mind, one danger for Apple right now is this. We're trading above the third standard deviation Bollinger Band. For those not familiar with the significance of that, we're not supposed to be there on a technical basis. You're not supposed to be there. So that doesn't mean it can't continue up higher. But if we break down on the daily time frame after breaking out yesterday, that will not bode well for Apple. So just keep an eye on that. With that, folks, thanks for joining in. Smash the like button. Join the Contrarian Trader 14-day free trial offer. Get TrendSpider for free. Take advantage of TrendSpider. 35% discount code below if you're not interested in joining my service. I don't know why you wouldn't be. And, folks, have a profitable trading day tomorrow. Have a magnificent weekend. And thank you for being here. I really appreciate it. And great conversation. Thanks for being here. Be well. Have a great night.